recently the gold price obviously has been a concern, but I mean, I think it all started a few months ago, if I can say, when effectively there was a lot of risk in the market that was now coming off. So in particular, most of the problems that were anticipated in the Eurozone area didn't actually, manifest themselves. But a few days ago, Cyprus was in a bit of a difficult position, and the risk somehow came back to the market. And from the gold perspective, one of the triggers that I saw, as the reason why you had a sell-off was when Cyprus's central bank actually proposed that it could actually maybe sell some of its inventory gold into the market, and that's the first position where you saw the gold price moving onto the downside. That movement down was not necessarily unexpected, but what has taken the market a bit by surprise has been the velocity at which the movement in the gold price has moved down. You had levels of easily 650, and from there we went all the way down. I think I saw a level of about 1,365, which is a significant move. History will tell you that is actually the biggest move in the last 30 years in gold price. Now, there are two factors that contributed to this. The first, in my opinion, was actually the type of investment that gold, most retail players in the market and investors actually were buying their gold at. It was mostly leveraged positions, and I do not have, of course, the exact numbers of the open exposure there, but the way it works is it's on your side when the gold price is going up, but immediately when it starts going down, you have to rebalance your portfolio and actually pay in the margin. Now that exacerbated the sell-off, and immediately we had this unbelievable fall in the gold price. You've now seen some levels of support. I've got a few people who've been telling me that sometimes a rebalancing of this nature could probably sometimes take about a week, and all of a sudden people were looking at gold perhaps at that level of 1,650 as expensive, and now all of a sudden you can buy it at below 1,400 2 days later, and they're probably trying to get back into the market. So we've seen some support. I mean, in particular today, it looks like it's going to touch 1,400 per ounce, which in my view would actually be a good thing. But to get as many buyers back as we had sellers a few days ago is going to take probably a super event. Now that's not likely to happen in the coming months. But going forward, that's going to be what people have to look at. A possible default again in the Eurozone area, and more quantitative easing in the US, Japan, and most of these other economies could actually again have that push factor. But from a company perspective, if you see some of these South African producers, they're going to come under significant pressure. $1,400 an ounce is, the last numbers I did, I mean, that could probably wipe out 40% of Anglo Gold South African production. That could hit as much as 60% of the Sibanye, the old goldfields, the South African production. In Harmony's case, that could also wipe out about plus minus 60% of their production. So the ramifications of a sustained low gold price are quite there. I mean, they're not as difficult as you saw in the platinum sector, but I mean, this could be a significant problem for the country going forward. Then, if you see what has happened with the rand, that has obviously been perhaps a mitigating factor because the rand has also weakened. So your actual rand gold price has somewhat played around 400,000 rands per kilogram, which is not as bad as the movement that you saw on the downside in the US dollar terms for the gold price.